as we're watching this crisis play out, we are seeing somewhat of a risk premium priced into oil.
Right.
$100 Brent, 95 on WTI. At what level would Devon start pumping more?
Well, Haley, it's very nice to be here with you this morning. I think for us, we're really going to be disciplined. We're going to continue to be focused, and the forward curve. If you look at the strip, it's saying the markets which are always very efficient. They don't think crude oil prices will stay at this level for long because you have such a steep backwardation. For us, we need to see the shape of that curve come back up.
Rick, good morning. It's Guy in London. Even if you wanted to pump more right now, how restricted are you in terms of labor, in terms of all of the other stuff that goes into producing a barrel of oil? How easy is it to come by? How production restricted are you right now?
Well, that's a great question, Guy. I can tell you that labor is tight, especially where we've gone on record as saying the Permian Basin is probably where you're going to see most of the sustained growth. That's not to say some of the other basins couldn't have some growth, but sustained growth is going to be in the Permian, and we continue to share with our investors to the market that the market is tight. Let's be patient. Let's be disciplined, and we are still recovering from a pandemic. We can't forget that, and so. Things are tight. We've seen tightness in things like steel, things like sand, and other things. So I think patience and discipline are the key words for us right now.
Well, obviously, Rick, tight on the supply side because production capacity is still constrained, not just in the shale patch, but from OPEC as well. On the demand side, given how high prices are, do you think there could become a point where we're going to start to see demand destruction in the oil market? I
really think so. And I think that at what point is it going to be, let's just say, that's a point of discussion. We won't know till we start seeing it. I personally don't think you would see much demand destruction until we saw a WTI of 120 or somewhere in that range. So I still think that you could see the commodity continue to move higher before you start seeing that demand destruction. But I think for many producers such as Devon, we need to see the shape of that curve come back up. And so I think the only thing that's going to happen is continued discipline and focus.
Rick, you've mentioned the curve twice now, and there are some that think that actually this could be a much more sustained crisis than is currently being priced into that curve. As you say, heavy backwardation right now. Do you think the curve's right?
I think the market is typically very, very efficient. And we get this question quite a bit, especially over the last, 72, 96 hours where we've had the developments in the Ukraine, the way it's all played out. At what point could you start seeing additional barrels be put into the market? And quite honestly, if you were to add a rig today, you would be 9 to 12 months before you really started seeing the impact. Most of the development that we're doing here in the U.S. today is on multi-well pads. So you're drilling 4 to 6 wells on a pad. So you have to drill 4 wells, you have to complete those at facilities, and so if you could drop the flag today, you could say roughly 12 months out, and that's where you start thinking about the impact of inflation with the additional activity, labor issues, things like that, coupled with that backwardated curve, and that's where most producers are saying, and I know Devon, we're not going to be the first ones to the starting line. We've seen some growth from the private companies, and bear in mind, we could see anywhere from 500,000 barrels a day to 1 million barrels a day at the high end here in the U.S. of supply added in 22 over 21. And so we will see the U.S. doing their part to get additional barrels in the market. But for publicly traded companies such as ourselves, we're going to try to keep production levels flat, be consistent, and make sure that we get really good barrels into the market on a very trustworthy basis. That's a term that I heard used the other day, and I think it hits a nail on the head.
All right, so staying disciplined on the production side, Rick, obviously you are returning a lot of capital to shareholders as well. Do you foresee putting capital to work elsewhere, making acquisitions, any M&A in Devon's immediate future?
Well, that's something we're always looking for bolt-on type acquisitions that make sense and are adjacent to the 5 basins we're in. we're really thoughtful. The fixed plus variable dividend has been a big hit. We've also announced a share repurchase program, and so for your listeners, we have a $1.6 billion approval, of which we've already in the fourth quarter of 2021. We repurchased $600 million worth of our shares, a very attractive $42 a share price, I might add. So we'll continue to be opportunistic. We're also paying some additional debt down. That's our plan over the next 24 months. We have a chance to pay off another $1 billion of debt, only which about a fourth of that is actually maturing. So we're calling debt, and so doing everything we need to do just to build a very, very strong company, strong balance sheet, great assets, great people. The variable dividend, getting cash back to shareholders. So the next thing is the debate of the fixed plus variable, how much of that needs to be the fixed piece of that. And I think we'll continue to do that. We just announced a boost from 11 cents a share to 16 cents a share on the fixed part. But we'll continue to discuss that with our board.
Rick, just in 10 seconds, should the president do an SPR release again?
Well, he certainly can. We've done that before. It really didn't make a huge impact, I think, over the long haul. And my personal opinion is that should be, you should wait on that until it's a true crisis. And that's not to say that we don't all feel a little more of a pinch at the pump, which we do. Yep. I put that in a different category than a true national crisis, which is the fundamental reason SPR was put in place to begin with. And so he can, but I don't know that it's going to make an impact for the long haul. I think we just need to be patient. We also have to recognize that the OPEC plus nations are having a hard time even meeting their quotas. So I think two or three things going on there. I think number one is they're seeing the impacts of inflation, startup issues. Many of these nationalized oil countries, I'm convinced, have been impacted from paying the bill of COVID. Let's face it, they've had their economies really stretched as well. And now I do think that down the road, I think this is where the curves are actually missing it, and it'll take time for them to fully realize that. And that is when these volumes fail to show up. And we've been underinvesting in this sector for quite some time now, and especially internationally. And so we'll see how it all plays out. But my thoughts are it's going to really roll over, and it's going to be really challenged.